A billionaire lands in Zurich. No press, no headlines, no announcements. Within hours, billions of dollars quietly move across borders, without triggering panic, taxes, or even attention. Nothing illegal, nothing obvious, and almost no one notices. Because this isn't a loophole, it's a system. And for over a century, Swiss banks have sat at the center of it, quietly controlling a disproportionate share of the world's wealth. Not by being the biggest, but by being the most trusted. And that's where things get strange. Because trust in global finance is usually the first thing to collapse. So why hasn't Switzerland? And how did a small landlocked country become one of the most powerful vaults on Earth? To understand that, you have to go back to a very specific moment. Not a war, not a boom, a fear. In 1934, Switzerland passed a law that changed everything. Banking secrecy became criminally protected. If a banker revealed client information, they could go to prison. Not fined, not suspended. Prison. Think about that. At a time when Europe was heading toward chaos, Switzerland offered something radical: silence. Not just privacy, protection. For anyone with money and something to lose. And the world responded. Wealth began to flow in. From politicians, from industrialists, from families trying to survive collapsing regimes. Even during World War II, while countries burned, Swiss banks stayed open, neutral, stable, quiet. Money doesn't like noise. It prefers places where nothing happens. And Switzerland mastered that. But secrecy alone doesn't explain control. Because today, secrecy is weaker than it used to be. Global regulations have tightened. Tax transparency has increased, and scandals have exposed cracks, even at giants like Credit Suisse. So why is the system still standing? Because the real power of Swiss banking was never just secrecy, it was infrastructure. Here's how it actually works. When wealthy individuals or institutions move money globally, they face three problems: risk, jurisdiction, trust. Risk means political instability, currency crashes, sudden policy changes. Jurisdiction means laws that can freeze, tax, or seize assets. And trust is the hardest one. Who do you believe will still be stable 10, 20, 50 years from now? Swiss banks solved all three. First, political neutrality. Switzerland doesn't pick sides easily. That means fewer sanctions, fewer sudden shocks. Second, currency stability. The Swiss franc has a long history of being boring. And in finance, boring is valuable. Third, legal predictability. Swiss courts move slowly, carefully, consistently, no surprises. Put that together and you get something powerful, a place where money can sit without being disturbed. Now here's the part most people miss. Swiss banks don't just store money, they structure it. Through private banking, wealth management, trusts, and layered accounts, money is reorganized across jurisdictions. It's not just in Switzerland, it's routed through Switzerland. Imagine money as water. Swiss banks don't just hold the water, they control the pipes. And when you control the pipes, you influence where everything flows. This is why even governments, corporations, and ultra-rich families use Swiss financial institutions. Not because they're secret, but because they're efficient. And efficiency at scale becomes power. Now let's talk numbers. Switzerland manages trillions in offshore wealth. A significant portion of the world's cross-border private assets passes through its system. And here's the irony. Switzerland itself is a relatively small economy, but it manages wealth far larger than its own GDP. It's like a small town running the vault for an entire continent. Quietly, consistently, and mostly out of sight. But this system isn't invincible. In recent years, pressure has been building. Governments want more transparency, regulators want more control, and public trust has started to crack. The collapse of institutions like Credit Suisse wasn't just a corporate failure. It was a signal. Even the most stable systems can wobble. And when trust is your main product, a wobble is dangerous. Because here's the uncomfortable math. Swiss banks don't control money because they own it. They control it because people believe they're the safest place for it. The moment that belief weakens, the system doesn't slowly decline. It moves, fast. Capital is fluid, it doesn't argue, it relocates. And in a world where new financial hubs are emerging, Singapore, Dubai, even digital systems, the competition is growing. So now we're in a strange moment. Swiss banks are still powerful, still respected, still central to global finance. But the reasons they became dominant, secrecy, neutrality, stability, are being challenged in ways they never were before. And that raises a bigger question. If the world's money has always needed a safe place to hide, what happens when no place feels truly safe anymore? Because when trust disappears, money doesn't just move, it runs. Don't forget to like, share, and subscribe the channel to view more interesting videos.